Hello, everybody, and welcome to the latest edition of the Export to Japan podcast, brought to you in association with the British Embassy in Tokyo and the British Market Council. From time to time, through our work at Export to Japan, we get inquiries in from companies that ask about the whole area of mergers and acquisitions. And we've noticed a little bit of a trend recently with more companies approaching with questions on this topic. And it's an area we've never really covered or looked at in any great depth on Export to Japan. So I wanted to put that right and learn a lot more about it. So I had a good think through my Rolodex of contacts, and a very long-term acquaintance of mine, Yuuichiro Nakajima, who is joining us here today. Welcome, Yuuichiro, to the Export to Japan podcast.
Hello, Steve. Good to see you.
Very nice to have you here. Now, Yuuichiro set up a boutique agency called Crimson Phoenix, specifically to work in this area of mergers and acquisitions. I think it was somewhere around 20 years ago. He's been doing it a long time. He and I do go back a long way. And I thought if we want anyone to come in and give us some thoughts and advice and share some wisdoms on this topic, he is the man I needed to track down. So we've got him here today, and I'm really looking forward to this conversation with him. I'm planning to cover various topics and various questions with him, and we can talk about the recent trends on a global basis, and in particular with regard to Japan in the merger and acquisition space. I'm going to ask Yuichiro about the area of what is motivating Japanese companies to be working in this space and the sort of things that they're looking at the moment. Also, we're going to be looking the other way round for international companies that may be looking to do M&A activity in Japan. We'll learn a little more about that sort of inbound activity with Japanese companies as targets. And I also plan to ask Yuichiro a little bit about what considerations international companies should have when they're entering the Japanese market, and in particular thinking about this area of mergers and acquisitions. And then finally, I plan to ask him a little bit more about how things should be perceived through Japanese eyes. You know, what do Japanese companies think about in this space, and what's the unique way that they think, and what sort of challenges are to be faced on both sides in this particular area. So I'm looking forward to the discussion very much, and let's get the ball rolling with a very broad question, Yuichiro. If you could tell us a little bit more about your views on how the M&A market has developed globally in recent years, and in particular focus that in on Japan, please.
Yes. First of all, thanks for inviting me to take part in this podcast. It's a great honor and privilege to be here and to address your audience. Talking about the M&A market, well, let's say globally, for a start. There's been a report recently that the Nikkei reproduced, which said that the number of M&A deals around the world declined for the third year in succession in 2024. And we're talking about number of deals, not value, but I'll come to value later. But in terms of number of deals, they were down by 14% from 2023. And this decline is attributed to political uncertainty because, as you know, last year, almost half of the global population took part in elections. So that put a brake on some M&A activity. There's the continuing discord between the US and China, which doesn't help anybody in terms of business confidence. And in most advanced economies, interest rates remained relatively high, which discouraged people from taking on debt to finance acquisitions. Now, in terms of value, this was higher in 24 because there were some mega deals in the US in particular. And I think those sort of anomalies help to push up the value of transactions around the world. Now, put that aside, looking at Japan, Japan has continued its activity, M&A activity, and increase in M&A activity in 24. There's been a growth ever since 2013, almost uninterrupted, positive growth in terms of deal volume and deal value. And certainly there were 4,700 M&A deals that Japanese companies were involved in, both domestically and on the international stage. And the value for 24, the aggregate value of all the deals were something like 20 trillion yen, which in US dollars is about 130 billion dollars. So that was the highest figure in ever in history, other than in 2018 when Takeda Pharmaceuticals famously took over Shire, and that one deal pushed up the total number of deals above the record level. But anyway, so it's Japan is a very active M&A market.
Yeah, that's fascinating. I mean, both to note your views on the wider global picture, but in particular, thinking about Japan and how active Japan has been and continues to be. I mean, we do know that Japanese companies over the years have been keen investors and acquirers in overseas markets. If we drill into that a little bit more deeply, what, in your view, what's the motivation behind those Japanese companies being active in this way at the moment and over the recent years?
Well, M&A is obviously a commercial activity and is very much driven by what happens in the marketplace. And as we all know, the Japanese market is aging and shrinking. And therefore, the market size is becoming less and less attractive to many Japanese companies, more competitive because there are fewer people to address for the set number of competitors. So they look to overseas markets for growth opportunities. So it's a sort of strategically driven behavior. There's also a view that there are still many attractive business models and technologies and markets outside Japan, and why not go and take advantage of those attributes there. Then there is the more sort of environmental, shall I say, factors that push Japanese companies to go abroad looking for acquisition opportunities. And one is the pressure from the Tokyo Stock Exchange in particular for listed companies to increase their return on equity and contribute to the increase in shareholder value. So that means either or both of selling non-core activities and buying companies that are profitable and run well and have lots of growth prospects. So those are what's driving the growth in M&A. Perhaps another one to talk about is the sort of particular behavior of Japanese companies or Japanese corporate groups. This is prevalent in manufacturing and traditional manufacturing activity. For example, when a car assembler sets up a plant abroad, and many of them have done that a lot, then their tier one, tier two, and maybe even lower down suppliers want to go and co-locate with the new plant in that overseas market. And a quick way of doing that, other than starting afresh on a greenfield site, would be to acquire a local business that can produce the required products and have the logistical network and infrastructure to supply the car manufacturer.
Yeah, that is such a good example you give there. And in fact, I think we saw that as a real live example with Nissan's investment in the Sunderland area here in the UK. I think that led to several other tier two suppliers, for example, from Japan coming and co-locating or investing in the area. And so yeah, that's a very valid and great point that you made there. I suppose it's also an interesting point for the various government agencies and organizations around the world that are looking to attract inward investment into their regions or their cities or their countries, that should be very much part of their strategy of thinking about how they encourage that inward investment, and thinking about the bigger ecosystem that comes with it. It may not necessarily be the one company you're targeting to come in and set up, but there could be a sort of an ecosystem that comes in around that. So some very,
Yes.
very valid points there. Thank you.
Mm.
How about if we look at it the other way round then, from your experience? Because I know with the great work you do at Crimson Phoenix, you are helping this activity both ways. You're working with international companies looking at Japan and Japanese companies looking out as well. So how about the other way around? Japanese companies as sort of investment or acquisition targets. Is there a lot of Japan inbound activity in that sense?
Yes, that's been increasing over the years, and still, it's a relatively small segment of the M&A market because outbound activity is much greater than inbound. But as I mentioned just a little bit earlier, uh, especially listed Japanese companies are under pressure to increase their return on equity, and so in addition to going abroad and acquiring profitable businesses to achieve that, another way of getting the same result is to sell off non-core activities, underperforming businesses and subsidiaries, and improve the metric in that way. So I think that, and over the years, I mean, I've been in the market for quite a long time, as you say, and M&A used to be a very dirty word. Nobody wanted to talk about it, even though they thought about it a lot. Now it is a completely accepted part of the management toolkit, and that's been helped particularly by the initiatives of the Abe government, which the second Abe administration started in 2012. And very soon after he came to his prime ministerial post, Shinzo Abe introduced, or he instigated the introduction of the Stewardship Code and the Corporate Governance Code, which basically is about what companies ought to keep their focus on in terms of shareholder, other stakeholders, and how that governs those considerations govern their behavior. And that those codes were, I think, a great catalyst for changes in management thinking about shareholder value, and that became the impetus for greater M&A activity, both on the sell side as well as the buy side. Companies became more aware of the need to sell off certain businesses that they couldn't grow adequately or make returns from. And management became much more emboldened to talk about the previously unspeakable subject of selling businesses. They was unspeakable because they obviously had negative connotations, that there was a failure, that the employees' jobs may be put at risk, factories may have to be closed, and so on and so forth. But I think um, after decades of sort of denial, I think Japan, or management in Japan, particularly at listed companies, came to accept reality that they couldn't carry on like that anymore. And one last factor that I might mention is that particularly in the private company sector, so unlisted businesses, there usually, or there often are succession issues, especially if the company was founded by a family and the family continued to manage that business. And there is no next generation to take over the managerial roles. So they, what do? They cannot wind up the company because that would make that would have a lot of damaging effects on employees, local economy, and so on. So they looked for solutions outside, and the outside solution is very often selling the business to somebody who can take over the management and to keep running it. So those are some of the factors.
Got it. And a really good overview of different thoughts and different ways to approach it and think about it. And I do agree with you. I remember when I started out 20, 25 years ago, this sort of M&A activity was sort of referred to as a bit of a dirty word and the sort of elephant in the room that people didn't want to talk about or acknowledge. But actually, as you've suggested, there's so many reasons why it shouldn't be that way. And in fact, a lot of the projects that I've worked on over the years of helping international companies come into the Japanese market, and we've looked at the various different options for market entry strategy. And merger and acquisition is often the right one and a good one to do. And particularly in this fast moving market where you don't necessarily have time to build something from scratch, going in and acquiring a business or part of a business that already has a footprint, has some IP, has some knowledge, has human resource experience can be a much faster way to accelerate growth more successfully in markets. So yeah, I echo a lot of the very, very good points you made there. So thank you. Okay, let's move on a little bit more then to thinking about international companies that might be listening into this podcast that are thinking about approaching the Japanese market, and they may have M&A activity as part of their strategy, either immediately, or they may be thinking of it further down the line. What sort of considerations come to mind for you that we should mention to those foreign companies as they develop their approach to the Japanese market?
Yeah, well, I think the first thing to say is that money speaks in Japan as it does elsewhere, but perhaps it doesn't have the loudest voice. And what I mean by that is that paying, big money doesn't always get you the deal in Japan. And, perhaps this is not unique to Japan, but certainly it is a pronounced factor in Japan. Those foreign investors and acquirers interested in Japanese targets would do well to establish good personal as well as business relationships with their intended targets and win their trust. I think that is quite simply the first rule, I think. We've discovered over the years at my firm Crimson Phoenix that the highest bidder, that the bidder that pays is prepared to pay the most money, isn't always going to be the winner in any sort of sale process. And those matters that are non-financial but are still very important include the buyer's plans or respect for employees, suppliers and customers, brands, and indeed company history, as well as the sort of ongoing relationship with the founding family, if the target is a family-owned entity. So the shareholders are not there to make the most out of the sale. They will, yes, of course, they want to be paid, they want to make good money, but they also want to be seen as good sellers. And a good seller in that Japanese context is not not sellers who do best by their fellow shareholders. A good seller is somebody who makes sure that there's no wholesale redundancy program that is implemented as soon as the sale is complete, and the employees are, thrown out onto the street, or other stakeholders like suppliers and customers are then told that their relationship is with the company is now over or going to be changed dramatically, and all those sort of things. It is possible to do those things. It is possible and maybe even necessary to rationalize. But I think the foreign party must make sure that that happens in a, but if not consensual, a gradual way, and that doesn't upset the apple cart too badly in one go all of a sudden. So I think the emphasis has to be on taking things slowly and not believing that everybody is just in for themselves to line their pockets and nothing else matters, because that's not quite the case at all. And so in order to, I mean, these, I mean, what I just said is easy to see on paper and so on, but actually quite difficult when you're in a negotiating situation with the seller. And I would say, and I would say this, of course, but I would say that it's best for foreign investors and acquirers to take advice from a firm of specialist advisors who can navigate their way through these fairly culturally sensitive issues. So yeah, but I mean, since you asked the question about inbound activity, I might just add, if I may,
Mhm.
what happens about to foreign companies that come to Japan or are already in Japan and want to be acquired by a Japanese party. You know, perhaps they have a subsidiary that's been running in Japan for the past 40, 50 years. The companies, the group's focus has shifted away from the activity that that particular Japanese subsidiary carries out, or whatever. Or maybe there's a partnership with a Japanese company which the foreign party wants to disengage from. Um, uh, and what do you do in that? What considerations do you have to have in mind when considering what to do? Again, here you may put a fairly low price tag on that business if you want to sell it to your Japanese partner or whoever, because that may make the business attractive for the buyer. But again, the an attractive valuation alone is not going to do the trick. Um, I mean, to make an obvious point, the business itself has to be attractive in terms of products and services, technology, the market that it addresses, and basically has something that the Japanese party doesn't or doesn't have access to, whatever. And importantly, I think trustworthiness is very important, as well as the ease of communication. Because for a Japanese business, uh, engaging with a foreign seller is is a big step, and you have to be able to understand each other well in that respect, and um, perhaps all of these factors may explain why joint ventures in Japan between Japanese and foreign parties have long been used as a sort of intermediate step uh, before a full takeover or a full sale of a business.
Yeah, that's a great point. And actually, I want to probe a little further on that joint venture and ask you a sub question on that. But before we move into that, I just want to comment on your summary there, because I think you articulated that so brilliantly well. I noted down that comment you made because it resonates with me so well. And if you haven't, I don't know if you can patent or trademark that comment, but I think it's such a great little summary. I'm just going to repeat it back. Money speaks in Japan as it does elsewhere, but perhaps it does not have the loudest voice. And I think that, to me, having done this for 25 years, that summarizes so much about relationships in Japan and doing business in Japan. And of course, you explained all of that summary so well from the point of view of this discussion, the merger and acquisition topic we're discussing. But actually, in my opinion, a lot of what you described there applies to business in Japan in general, and the approach to entering the Japanese market and building your business there and developing relationships with customers. So anyone listening into this podcast right now, if there's any part of this podcast you might want to just replay and listen to carefully, I think it would be the answer to that last question and that last topic we've just covered. So thank you for that. But moving on, you did mention joint ventures there, and again, I know from my experience, I've been involved in a lot of deals where we
Mm.
help international companies set up joint ventures, and generally it sort of goes very well and is an effective route. And you just touched on it a little bit. I mean, what is your view on joint ventures and where they sit, and is it an effective part of the strategy from your perspective?
For foreign entrance into the Japanese market, it used to be a very, let's say, a traditional way of entering the market, because it was, I guess, non-threatening. In a way that if you come into Japan and say, okay, well, I want to acquire this business so that I can use that as my base in Japan, then that means taking over somebody's business, and that was fairly threatening in the olden days. And therefore, finding a partner and say, okay, well, let's do this together. We'll do it 50-50 so that nobody has control, and we'll just, work together in good faith and all that. That used to work, and that used to be the accepted way. Japanese companies have changed, and the world has changed, and people have become to have realized that 50-50 is the worst form of corporate governance. I mean, because nobody has the final say, and it can easily lead to a stalemate, and nothing happens. Nobody can decide anything. So I think the modern day joint ventures are sort of there's a clear majority shareholder and a minority partner, and I think that probably works better. Um, and it applies to Japanese joint ventures abroad as well. I think I think there's always going to be somebody who has the upper hand in some way, and I think it's much more natural for joint ventures to be not to be 50-50 anymore. Um, but I mean, having said that, we just advised a Japanese publishing company on setting up a French joint venture with a French partner, and just trying to think. I think that was the Japanese party did take a majority position because it was its IP that was going to be sold in the French-speaking markets in Europe, and that the French party accepted that. Therefore, this Japanese company ought to have the majority in the running of the business. But now, so I mean, that was the traditional way of doing things. The modern way, the 21st century way of doing things, has a little bit of a different flavor, and one of those different flavors might be the sort of tech startups. I mean, some people may be surprised, but in Japan also has a tech startup sector, and there is a generation of entrepreneurs who set up businesses specifically with a view to selling out to anybody who bids the most money, and despite all of what I said before, and so that they can A, make a return on their investment to date, and B, do something else that's interesting using that money. So the startup sector is still fairly nascent and small, and there are not many unicorns in Japan yet, but it's going to grow. I'm pretty sure of it. So yeah, I mean, Japan is a little bit behind, but getting there.
And certainly so encouraging to hear those comments about young Japanese entrepreneurs coming through? Because I know in the past, historically, that's not culturally how business has happened in Japan. And the way Japan has done it over many years is an incredibly successful way of developing business. But I think there was an opportunity for the younger generation to come through and have this slightly more entrepreneurial, independent thinking mind. And it's encouraging to hear from you that there are good signs of that happening. And it will be great to see what impact that has on the
Mm.
Japan economy and in this area that we're discussing today, the M&A activity.
Yeah.
Okay, moving on. You mentioned that you gave that example of the Japan company you've advised recently with their French acquisition or joint venture. And as I said, I know you have a lot of experience of doing this trade both ways. So I wanted to sort of take the chance to ask you from your perspective, when Japanese companies are considering acquiring international businesses, what sort of things should they be most careful of, and what considerations come into their mind from a Japanese perspective? Can you share some thoughts on that?
Mm. Yes, I mean, well, let's take the UK as the target market because we're both based in the UK and so on and so forth. And I would say that Japanese companies have become very much more adept at screening targets and sort of putting on the right kind of valuation on the target and negotiating with the relevant parties. So the sophistication of the people involved in M&A activities at Japanese companies has increased in leaps and bounds. So great kudos to them. But in certain areas, they do remain somewhat under-equipped to maximize their chance of success. That is most evident when there is a controlled auction and Japanese parties are invited to take part in that. A controlled auction is where a seller arranges, usually through firms like us, M&A advisory firm and investment banks, a process by which multiple parties are invited to take a look at a set of confidential information about the target business and make a bid. And when if that well, first of all, they make an indicative bid. If the indicative bid is attractive enough, then they're allowed to go into what's called a data room to look at really very detailed and confidential, highly confidential information in a process called due diligence, and then formalize the initial bid into a final offer. And as you can imagine, this is a highly structured process with lots of deadlines, lots of do's and don'ts, rules of engagement, and so on. And well, I wouldn't say there are no Japanese companies because that's not true at all, but there are only a few Japanese companies who would willingly take part in auctions because it requires the bidders, the people who participate in the auction, to be quick in terms of decision making and in terms of response to questions asked by the selling side. And, as you know, Steve, Japanese companies, even though they have changed in a number of ways, many of them still have this system of decision making, which is quite bottom up. And, everybody, well, if not everybody, most people involved in that bottom up decision making have to agree to a set course of action. And which means that it takes time for decisions to be made. Once the decision is made, it's usually very quick to execute that. But to get to that point usually takes time. And, Japanese companies tend not to like being put pressure on in order to comply with controlled auction timetables. So that could be a difficult thing to negotiate. But having said that, we have advised a number of companies who are perfectly willing and able to follow the rules and the structure and the timetable, and do reasonably well. I've worked on a deal like that a couple of years ago in the States, where of the three final bidders, two were Japanese, and the what happens in those situations is that each bidder bids up the price. So it's great for the seller because the competitive and pricing tension makes sure that the final offer tends to be very much more attractive than the seller initially expected. So that's the whole point about controlled auctions. And I think it would be good for Japanese companies to be able to cope with that. And maybe the way to do it is to just delegate to a small team of specialists who have the authority to take decisions, and who report directly into the CEO or CFO of the group. Um, sorry, I went on for a while, for a bit, but those are some of the things that I think Japanese companies in the UK could perhaps learn to do better.
No, it's an absolutely fascinating insight, and I'm sitting here listening to you talk through that, and it's absolutely resonating with me. I can understand exactly what you're explaining. Knowing what I know about Japanese decision making, the good bits and the less good parts. But it's an interesting double-edged sword, isn't it? Because as you explain, anyone wanting to sell an asset or a business obviously wants to try and do all they can to achieve the best price. But also, you don't want to have a process that excludes or makes it difficult for Japanese acquirers for all the reasons that you've just described. So, very, very tricky one. And also on the Japanese side, Japanese companies don't want to miss out on opportunities to acquire because they find the process difficult to cope with. So, yeah, very, very tricky one. But I like your solution too. It's great that you've come up with an idea and a solution, because I was sitting here thinking that's a real challenge and I don't know what the answer to is. And I think you may have
Yeah.
nailed the answer. And that's probably why you're so good at what you do. Lots of experience
Thank you.
speaking there. So,
But can I just add one more point?
of course, please.
The I think Japanese bidders, parties that take part in bravely take part in these auctions, are considered to be good bidders. The Japanese buyers are um, attractive to UK businesses on the whole, precisely for the reasons that I mentioned earlier, because they take acquisitions very seriously. They're not financially driven. They're not going to try and flip, the business that they acquired, which means to say, you buy a business, you tinker with it to increase its value, and then 2 or 3 years later, just sell it to somebody else and make a margin, make a profit on it. No, well, to the extent that I know, no Japanese companies would do that or think of it, principally because they won't be able to do it even if they wanted to, because it's just too difficult to do anything like that. But it means they carefully select the companies that they want to acquire. So they have a very detailed and coherent strategic plan for the acquisition. And they approach the target with respect, not because there's a lot of value in the relationships that the target has. They don't want to destroy that. They actually will rely on incumbent management to continue running the business, if not forever, for a set period of time, be that 18 months, 2 years, 3 years, or whatever. So they don't want to upset the managers that are already there, and they tend to pay good money. I mean, even in this uh, environment where the yen is extremely weak, Japanese companies are prepared to pay the price to enter a foreign market or expand in a foreign market. And so in auctions, Japanese companies are welcomed. And I think, you can ask any number of investment banks, and I'm pretty sure they'll all say the same, because they're not frivolous. They're not frivolous bidders, they're serious. And I think that in a funny sort of way, I think that's a great endorsement of the way that Japanese companies run themselves.
Yeah, I couldn't agree more. I would endorse everything you've said there from my experience over the years of doing this. I think you've articulated that point incredibly well. Um, I wanted to ask you, while we're sort of on this topic of Japanese investment in overseas firms, what about private equity funds? Do private equity funds play a large role in the Japanese M&A market?
Yes, they do. They play a very important part, and they have done for the last at least 20 years. I'm inclined to say more like 30 years. Um, yeah, maybe not 30, but certainly 20, 25 years. Uh, and what they did was they made M&A, the term M&A, part of the everyday management parlance, because apart from a few operating companies, the big ones like GE or Siemens or whatever, uh, who came in Japan fairly early on, and established the base, and perhaps acquired a few local Japanese companies along the way. It was, I think, really what the PE funds tried to do that made M&A an acceptable tool for Japanese businesses. So I think their value to, or the contribution that they have made to the Japanese corporate scene is should be highlighted more. I think they're very much undervalued, underestimated. But anyway, sorry, I am whittling on. Uh, so so they managed to chip away at this traditional reluctance and or resistance on the part of Japanese companies to sell the whole group or parts of their groups or whatever. Um, uh, and to emulate that success, and these are mostly, we're talking about American PE funds, some UK PE funds that went in and did this, and Japanese uh, sort of homegrown funds have sprung up. Um, Initially financed by banks and securities businesses, but now there are a myriad of different types of PE funds, as well as venture capital funds that are Japanese in origin. And of course, the big American funds are still there. Big UK and European funds are there as well. Some of the biggest deals that happened over the recent year, the recent past, like Toshiba, like Fujisoft, which is going on, um, and the recent acquisition by Tanabe Pharma. These all involve PE funds from abroad. Arm Holdings was bought by Vision Fund, which is a part of SoftBank. And I think because it has outside investors, even though it is part of SoftBank, I think you can legitimately call it a private equity fund. So they've done, some of the epoch-making deals, and I'm sure they will continue to do so and play that part in activating sort of major shifts, major transformations in certain corporate groups or even certain sectors. Um, the Just to talk about Japanese funds, so they're active as well. They've done some great deals in Japan. What they haven't done so much, Japanese PE funds, is to make significant investments abroad. There are a few that have taken over businesses in the US on the West Coast, particularly around the Silicon Valley. Some have done the same in Southeast Asia, but there's only one that I know I can think of that is looking at acquisition opportunities buyout opportunities in Europe. And that may be because they simply don't have the mandate from investors to invest abroad, because investors may think, well, why do I give a Japanese PE fund my money to invest in overseas companies? I can give my money to, American or European or UK PE funds and do the same, and they may even do a better job. But I think my view is that I think Japanese PE funds should actually advocate, tell their investors to give them the mandate to invest in overseas markets, because I think ultimately that helps the investor, because the investment managers will have can understand and will follow certain Japanese perspective relating to how to assess an investment opportunity, how to execute an investment, and how then to run that business. So I think that is a growth area, and I think that should be encouraged a lot more.
Well, that's fascinating, and I'm sure what you're saying makes sense, and I'm sure with encouragement from organizations like yourselves and others, we probably will see that as a bit of a trend happening in future. And I get the logic behind the reasons why that you're suggesting, and let's hope that happens.
Mm.
I've got one eye on the clock, and we are getting towards the time we need to wrap up now. But there is one final, really important point I would like to just get your views on before we wrap up today, and it is a really important part of the process, because we've had a great conversation and you've shared some great views on the Japanese view on the sort of acquisition and merger process and some of the challenges around that and some of the advantages around that. But of course, acquiring a company or part of a company or merging is a very, it's one part of the process and a very difficult part of the process. But of course, there's a lot of hard work that needs to be done after that as well. So, and I know part of the work you do over the years is also sort of advising and helping companies on the entire process. So I wanted to sort of pick your brains and get a few thoughts on that part. So what sort of challenges would you say face Japanese investors, when they've acquired the businesses abroad? Could you share a few thoughts and wisdoms on that, please?
Yeah, yes, absolutely. I mean, buying a company well, a target well, is one thing, but running it well is quite another challenge altogether. And that is where I think, I mean, that is possibly even the more difficult part than putting the right value on the target and, executing an acquisition and so on. Which goes sort of takes me back to a point that I made a little bit earlier about Japanese companies relying on incumbent managers to carry on running the business for a set period of time. And I think that is fine up to a point, because I mean, if you can in the background while the incumbent managers are running the business, if you can start the process of integrating whatever that needs integrating, maybe that's systems, maybe that's a list of suppliers or customers or whatever. But once these people are gone, they're in an earn-out arrangement or whatever, the former managers go, you're left to run the business. That takes a skill set that is perhaps not present in the Japanese group as of now. So you have to either grow local talent, or you have to be prepared to engage outside help to manage the change management consultants and advisors, and those kind of professionals. You may need to rely on them to run those acquired businesses well. And it used to be the case that you sent one or two directors to sit on the board. Maybe they're based in Japan and they only fly to board meetings, one for one of every two board meetings they would attend in person, and otherwise they were there on the phone or on Zoom or whatever. I'm not sure if that's a model that is going to be continue to be effective, if it was at all before. Given the current or the recent focus on corporate governance matters, I think directors' responsibilities have increased a lot. And you cannot just be a nominal director. If you're a director, you're on the board, whether you're executive or non-executive, you're going to be held to account by all kinds of people, and therefore you've really got to step up and grow people in-house who can take on that kind of responsibility, both operationally, financially, and from a governance point of view, and make better use of local talent. You just have to engage people who are based in the target market. Maybe it's if you're talking about the UK target, then people who are already here, just employ them and give them a job to do in terms of running the business. And it's probably uncomfortable for Japanese companies, traditional Japanese companies in particular, but I don't think there's any other way of doing it, really.
Absolutely. Very, very wise words. And thank you for sharing that. Well, we've come to the end of our conversation now, and thank you so much for sharing incredible insights from so many different perspectives on this fascinating topic. And I hope for everyone listening into the podcast today, I hope that has really helped shed further light and some more thoughts on this whole area of mergers and acquisitions, both ways, through Western eyes, through Japanese eyes, inbound and outbound acquisition. And I would certainly recommend to any of you listening in, if this is part of your strategy and something that you're thinking about in whichever direction, with your approach to the Japanese market, then reach out and have a chat with Yuichiro. He clearly has a wealth of experience that's come across very clearly, and he will be able to help and guide you. On that point, what is the best way? We can include a link to your website, of course. I know you're very active on LinkedIn. You put some amazing pieces on LinkedIn that I always enjoy reading, as well as good insight. So what's your preferred method for people who may want to reach out and get in touch, Yuichiro?
Both of those, are fine. Website, LinkedIn. I can even give you my web email address later, so that could be included. But yeah, any means would be fine.
Super. I don't think anyone will find it too hard to track you down. And certainly we can do that. If anyone wants to get in touch directly, feel free to ping us an email at Export to Japan, and we will be able to introduce you and connect you up directly as well. So thank you once again. Really appreciate your time. It's great after all these years of sort of working with you and knowing you. It's great to actually sit down and have this conversation. I've thoroughly enjoyed it, and I've learned so much. I always continue to learn. So thank you for sharing those wisdoms,
Thank you
Yuichiro.
very
And
much.
I wish you a great day for the rest of your day. Everybody listening in, thank you so much, and keep tuned for more exciting podcasts from Export to Japan. Thanks a lot.
Thanks a lot. Bye.